We're continuing with our example of Camilla Inc., a manufacturer of custom cakes. In this video, we're going to apply manufacturing overhead to Camilla's current order using departmental rates. In a previous video, I introduced two methods of allocating manufacturing overhead, the plant-wide rate and the departmental rate. We then calculated the plant-wide rate for Camilla Inc., $22 per direct labor hour. This means that for every 1 hour of direct labor worked on a job, $22 of manufacturing overhead would be allocated to that job. We then use the application rate to determine the overhead to assign to Camilla's job of producing custom cakes, $74,800. The application of manufacturing overhead resulted in an increase to work in process and a decrease to the overhead control account, $74,800, which was then recorded in the expanded accounting equation, and it allowed us to determine the total cost of the job, $266,800, which included direct material of $73,000, direct labor of $119,000, and manufacturing overhead of $74,800. However, what if Camilla Inc., instead of using the plant-wide rate, used departmental rates to allocate manufacturing overhead? How would this change the allocation of overhead to that particular job? Using departmental rates is another method of allocating indirect manufacturing costs to products or jobs. In this case, multiple cost pools are developed, one for each department in the organization. Each department then chooses an appropriate activity level, the cost driver, what causes their costs to not only happen, but also to change. It's important to note that using departmental rates does not change the total amount of manufacturing overhead incurred. For example, if a plant-wide rate uses estimated total manufacturing overhead of, say, $1,980,000, then the estimated total manufacturing overhead when divided into departments is still the same, $1,980,000. So why use departmental rates? What exactly are the benefits? First, by tracking overhead by department, it allows management to identify cost trends, helping them to control their costs in each department. This is far more difficult when overhead costs are accumulated in one huge plant-wide pool. Second, the cost driver for each department can be chosen to better reflect the costs within the pool. For example, if we have a decorating department which is very labor-intensive, we'll use direct labor hour as the cost driver. However, if the baking department is highly automated with few workers, then a more appropriate cost driver can be chosen, such as machine hours. Being able to choose a cost driver for each department leads to a better allocation of costs to the job or product. These are the reasons why departmental rates might be adopted by an organization. Note that the use of departmental rates will result in multiple application rates, one for each department. The formula is the same though. Predetermined overhead rate is equal to the estimated annual overhead cost divided by the estimated annual activity level, or cost driver. However, a rate would be calculated for each department. Here I'm showing two departments, but organizations may have many more departments and would calculate a predetermined overhead rate for every single one of them. Once the organization has the different departmental rates, they will still use the same process to allocate manufacturing overhead to each job, using the following formula: predetermined overhead rates multiplied by the actual activity level used equals the overhead assigned to the product or job. We would repeat this calculation for each department, no matter how many departments there are. You can see that the flow of cost when we use departmental rates does not change. The only difference is that we would apply manufacturing overhead to the jobs using departmental rates. Note that our entries to the accounting system would not change either, except we would have multiple overhead control accounts, one for each department. Each department's overhead control account would include all of the indirect costs for that department. The tracking of actual overhead costs, such as for raw materials requisitioned, would be duplicated for each department, as you can see here. In this particular entry, I've recorded the requisition of raw materials for Department A and for Department B separately. Some indirect materials go into overhead control for Department A and some going into overhead control for Department B. The entry to allocate manufacturing overhead from the overhead control accounts to the work in process account would be the same. Decrease the overhead control accounts for both departments, increase the work in process account for the overhead applied. Again, we would simply do individual entries for each department. Let's use Camilla Inc. to demonstrate departmental rates. Camilla Inc. uses departmental rates to allocate overhead to all of their jobs. At the start of the year, the following estimates are available. Baking department, estimated overhead costs, $361,000. Estimated direct labor hours, 800. Estimated machine hours, 19,000. Decorating department, estimated overhead costs, $101,000. Estimated direct labor hours, 20,200. Estimated machine hours, 500. Total, estimated overhead costs, $462,000. Estimated direct labor hours, $21,000. And estimated machine hours total, $19,500. The baking department is highly automated, so they use machine hours as their activity level. The decorating department is very labor-intensive, so they use direct labor hours as their activity level. Calculate the predetermined overhead rates for each department. Notice something interesting. The baking department has manufacturing overhead of $361,000 and decorating has $101,000 for total estimated overhead of $462,000, which is exactly the same as the total overhead that we used in the plant-wide overhead rate. As I noted previously, using departmental rates does not change the total estimated amount of manufacturing overhead. It simply recognizes that manufacturing overhead is caused by multiple departments. The amount for each department is based on the estimated overhead that each department expects to incur. We can now calculate the departmental predetermined overhead rates for each individual department. Let's start with the baking department. We need both the estimated annual overhead costs and the estimated annual activity level for the baking department, and we get that from the question. Note that the baking department is highly automated, and therefore they use machine hours as their activity level, so we would use 19,000 machine hours. Shouldn't we use the total machine hours of 19,500? Absolutely not. We are calculating the application rate for the baking department, so we only use the machine hours for the department, which is 19,000 machine hours. We also need the estimated annual overhead costs for the baking department, which is $361,000. We can now plug the information into the formula for the baking department. $361,000 divided by 19,000 machine hours is equal to an application rate of $19 per machine hour. This means that for every 1 hour of machine time, Camilla will allocate $19 of overhead to the cost of the job. Let's now calculate the departmental rate for decorating. Again, we need the estimates first, which we get from the question. The decorating department is labor-intensive, so they use direct labor hours as their activity level. The estimated activity level is therefore 20,200 direct labor hours. Again, note that we should not use the total direct labor hours of 21,000. That's because we're calculating the departmental rate, so we need to use the direct labor hours for the decorating department only. We also need the estimated annual overhead costs, which for the decorating department is $101,000. We plug these into the formula to calculate the predetermined overhead rate. $101,000 divided by 20,200 direct labor hours is equal to an application rate of $5 per direct labor hour. This means that for every 1 direct labor hour of machine time, Camilla will allocate $5 of overhead to the cost of the job. We now have the overhead rates for both the baking department, $19 per machine hour, and the decorating department, $5 per direct labor hour. We can now use these rates to apply overhead to all of the jobs completed during the year, using the formulas to assign manufacturing overhead. Departmental rate multiplied by the actual activity level used in each department equals the overhead to be assigned to that particular job. Let's use it for Camilla Inc. Camilla Inc. has the following actual information for the month. Baking department, actual overhead costs, $77,400. Actual direct labor hours, 200. actual machine hours, $2,900. Decorating department, actual overhead costs, $21,600. Actual direct labor hours, $3,200, and actual machine hours, 42 hours. Total actual overhead costs, $99,000. Total direct labor hours, 3,400, and total machine hours, 2,942. Given this information, calculate the amount of overhead that will be applied to the current job. We're going to start again with the baking department. We already have the application rate, $19 per machine hour, so we can place that information into the formula. However, we still need the actual activity level used in the baking department when they made these cakes, and we get that from the question. We have machine hours of 2,900 for the baking department, 42 hours for the decorating department, and total machine hours of 2,942. Should we use the 2,942 to do the calculation? And the answer is absolutely not. If we are calculating what amount of overhead to assign to the job for the baking department, we have to use the machine hours for that department. 2,900 machine hours. Let's plug that into the formula. $19 per machine hour multiplied by 2,900 machine hours is equal to the baking department's overhead assigned, which is $55,100. This is the amount of overhead that must be assigned to the job from the baking department. Let's now do the same calculation for the decorating department to determine the overhead to assign to the job. We already have the application rate, $5 per direct labor hour, so we can place that into the formula. However, we still need the actual activity level used in the decorating department when they made these cakes, and we get that from the question. In this case, we have direct labor hours of 200 for the baking department, 3,200 for the decorating department, for total direct labor hours of 3,400. Again, should we use the total direct labor hours of 3,400? And the answer is no. We need to use the activity level of that department only, 3,200 direct labor hours. Plugging that into the formula, $5 per direct labor hour multiplied by 3,200 direct labor hours is equal to $16,000. This is the amount of overhead that must be assigned to the job from the decorating department. We can now calculate the total overhead to assign to this job. Total overhead applied is equal to the baking department's overhead assigned plus the decorating department's overhead assigned. $55,100 plus $16,000 is equal to $71,100. This is the total manufacturing overhead that would be applied to the cost of producing the custom cakes if departmental rates are used. Let's do a comparison between the manufacturing overhead that was applied to this job using plant-wide rate compared to departmental rates. In our last video, we determined that if Camilla Inc. used the plant-wide rate, they would apply $74,800 of manufacturing overhead to this particular job. We then calculated the total cost of the job when we used the plant-wide rate. Direct materials, $73,000, direct labor, $119,000, overhead applied, $74,800 for a total cost of this job of $266,800. However, if Camilla Inc. uses departmental rates instead in order to apply overhead, then the total overhead assigned would be $71,100. The total cost of the job is therefore direct materials of $73,000, direct labor of $119,000, overhead applied of $71,100 for a total cost of $263,100. Notice that the direct materials and the direct labor costs do not change. Only the overhead applied changes between the two different methods. Does this mean that the company saved money by using departmental rates? Because the overhead applied is only $71,100 compared to the plant-wide rate, which applied $74,800. Does that mean we're saving money? Absolutely not. We do not save money by using departmental rates. Remember that the total estimated manufacturing overhead under both methods was still $462,000. Then why is there a difference between the overhead that's applied when we use the departmental rates compared to the plant-wide rates? The difference is due to the use of multiple cost pools, which allows Camilla Inc. to choose better cost drivers that reflect the costs in the cost pool. This simply leads to better allocation. It might mean, in one job, that departmental rates will result in higher applied overhead, or at other times, as in this case, it results in lower applied overhead. It's due to better allocation, not because we are saving money or saving on costs. In the end, regardless of which method the company uses, plant-wide rate or departmental rates, the steps used to cost the products is the same. The only difference is the method used to apply overhead, either the plant-wide rate or departmental rates. The method used to calculate application rates may be different, but everything else is identical. That's it for departmental application rates. As always, thanks so much for watching.